Hello, everybody. Can you all hear me?
Yeah.
Yes.
Uh,
Yeah,
good, good, good. Switch computers and equipment and everything, and it all less goofy. Let's give it a minute and everybody get on. Everyone doing good tonight? Can you guys still hear me or no?
Yes.
Yes.
Oh,
yes, we can hear you.
okay.
Yeah.
Well, let's get started then. All right. Um, you guys should be able to see my screen, the trading view, I assume.
Yeah, I'm seeing it.
Yep.
Okay.
We can see your screen.
All right. So, what we one of the biggest things I see people do, particularly if my buddy Daoud is on or not, I don't know. Uh, are you on, Mr. Daoud Pata? Yeah, guess he's not. Anyway, so everybody always password is broken. Give me 1 second. You guys use sorry, people are sending messages for the thing. So a lot of the new traders in here, one of the most common questions is, hey, what indicators do I use? How do I trade? Time frames, all that stuff. And then, the same Discord has what, 19 to 20,000 members in there. So you can imagine it gets pretty crazy in here. You have all different style of traders, different time frames, different techniques, all the above. And it gets a little haywire. And a lot of times you'll see me in the chat there tell people, hey, trade your plan, trade what you see, what you set up. Because if you blindly follow anybody, whether it's me, any other pro, or what have you, what happens is you're never really going to learn to do it on your own. And that's the idea of this Discord and any of the pros and scouts, to help. I think my screen went out, didn't it?
Yeah, it did.
Yeah,
Okay.
your screen went out.
Give me 1 sec. Let's try this again. Good old Zoom. No, I should short it tomorrow. Um, so the biggest thing is everybody, like I was saying, comes up with different techniques, styles, indicators. There's 1,000 of them. I mean, if you just went into indicators, these are the favorite ones, and I don't use all of them. I find them interesting. I'll play with them. I'll try to code something. So those are just it. If you went in here, you could come up with just about anything you wanted. You name it, it's probably in here. And what I always come back and tell people is do not depend on the indicators. They should help you and assist you in your trades. Okay. Because indicators, don't matter what indicator it is, what chart setup it is, you could have the monkey chart, pig chart, Mario's AVOP combination of Mario Kart chart, alphas, EMA crossovers, faces, crazy laser dance chart. It doesn't matter. The trick is you have to understand how those indicators work, what type of setup you're trading, and then ultimately do it consistently to get profitable. So what I'm going to do in today's exercise, I'm going to show you is I'm starting with a brand new clean chart. Nothing except the volume standard, which you get when you open a TradingView new tab. Okay. Here's a very simple one I'm going to show you, and I'm going to build upon it. In other words, I'm going to start with the most basic idea. What is the setup? Okay. For the trade. Then I'm going to show you how you can then layer things on as you understand it or as you trade enough with it. You can see, like, hey, you know what? It'd be nice if I can figure that part out because I seem to be missing that piece. Everyone follow what I'm trying to say?
Yes.
Yes.
Oh, you guys sound really
Yeah.
enthusiastic here, let me tell you.
Yes.
Alrighty. So uh here's SPY for today. What I'm going to go through is you probably seen it in the chat. It's often called ORB, opening range breakout. Okay. Probably seen me post a couple of videos in it. Um Maro uses it. I use it myself. CP does. A lot of the future traders do, but you can use it on regular stocks as well. It will work just the same. And it's a very simple strategy, and that's why I'm going to try and show you the basic fundamentals of the trade is very easy. But then you'll be able to see later how you can turn it more advanced as you learn more, either with an indicator, maybe a different method from a different system that someone uses to help you with confluences. Because the end of the day, the idea of being a profitable trader is not if you get 200% today, $200 today, $200,000 today. Okay, maybe you hit it today, you got lucky. My biggest question is, can you do it again and again? And that's where I see a lot of people in the chat, they get nailed. All of a sudden, oh yeah, I did great on Tesla. I banked, I made, 2 grand on it. Following week, I see the same guy posting, yeah, I lost 75% of my account. That tells me a lot of things besides your setup, but your risk management most likely is off along with your position sizing, which I'm not going to get into just yet. Let's talk about how you set up a trade ahead of time. So this is a very simple one. So right now I'm in the 1 minute candle. The idea of this particular setup is you're looking for, let's switch to the 5. It makes it easier. The whole idea premise of this trade is right here, that opening first 5 minute candle. So let's see if I can, I'm going to go from that bar. You get a first 5 minute candle. You can do this on the 5 minute. You can do it on the 1 minute. I do them on the 1 minute, but just to show everybody, it can be done. You can do it like this. There's one. All I'm doing is doing the top of it and the bottom of it. Okay. Simple enough, right? So this is step one. Mark high of the 5 minute candle, mark low of the 5 minute candle. Doesn't have to be complicated. No indicators, no nothing. All I'm doing is watching price action. Now, the idea behind the trade is this. This is how the trade works. Price comes in, it pushed down, it closed here. What I'm looking for is a break above. So usually it'll break, retest, and go. Oops, there we go. Whatever. And the same with the other side. It should break below. Optimally, I want to see a retest and break down. Sometimes on range days, like kind of like today, you may get this. You get this, you'll get this, and then it decides to break, or sometimes it does the opposite. And we'll get to all those. But does everyone understand the premise of the trade now? Right? That's the setup I'm looking for. It happens every day at market open. New York open, first 5 minute candle. Everyone with me so far?
Yeah.
Yeah.
Ace, with this setup right here, this type of trade, um, or this strategy, I use this, but I add the pre-market high and low and the previous day high and low widget to have a greater range.
Correct. And I'm going to get that later. I mentioned that earlier that we're going to add to it. The idea
Ah,
was to start with the basic foundation and how you
uh-huh.
add on to it, not by throwing on 20 indicators and crossover lines and trend lines and everything else. The idea
Okay.
is to start with something basic. But yeah, you're right, though. I do that as well.
Okay.
So we're going to take it step by step. So there it is, right? So that's what I'm looking for. So now let's go ahead and play this and see what happens. Let's see if I slow this down. Yeah, let's slow it down. And actually, what I'd like to do actually is come back to the 1 minute. So after you mark off the 5 minute, 2, 3, 4, 5, and we're gonna start from right there. So that's the same 5 minute candle. I drop down to the 1 minute now. This is a scalping technique, and you can almost use it to trend for a while as well too. So it works pretty well. So if you get a handle of this, you can be done trading anywhere from the first 10, 15 minutes, maybe half hour or longer if you're swinging something a little bit farther out. So let's see what price action does. Still in the range, still in the range, nothing, nothing. This is just today, mind you. Still staying in there, hasn't moved. And we're coming at what? 10 o'clock or half hour in. Boom. What I'm looking for is this. If you see off the bottom, volume was very light, wasn't it? Other than the first candle. Well, that's from last day, sorry. First candle right here. Volume's pretty low. This is just a regular volume candle, nothing fancy. And you see the nice little uptick in volume right here, right? I also see what? A good green candle pushing off. Now I'm interested. Okay. Before that, I'm not touching it. And mind you, no indicators. Looking for a good retest. You get them and you don't sometimes. Let's see if we get one. There we are. There's my break. Comes back around. And what type of candle is that? What is that candle telling me?
The hammer, right?
That is a hammer. See the wick on the bottom? What does that tell you?
Could that be considered a shooting star?
Uh, you can, but no. It's more
That,
of a hammer candle.
that wick is telling you that buyers are stepping up right here.
Yep, that's showing you right here. Sellers came in, they're trying to push it down. Buyer said, nope, I don't think so.
Push it back up.
So this right here, off the bottom, the volume, I just look at the size. To me, it doesn't matter what color it is. Because what I'm looking at is what this candle's telling me. Let's take it a step further. Right here, I'm interested. So if I wanted to, I would take a long position from here And let's see. I'm going to say right under this wick right here. It's been kind of a choppy day. I'm going to go right here. See the ratio here? Everyone see that? Ratio of 1. So basically, I'm risking $1 for $1, right? This out of the way. We're going to shoot for 2R. Ratio of 2. Risking $1 to make 2. Okay? Now let's play this out and see what it does. And for those who don't know, if it goes down here, I'm stopped out. Over here, it's a take profit. It's going to keep going. Let me drag this. Looks like let's drag this out and see how long it takes. We're going to get stopped. And just for the record, I didn't play the opening range this morning. I was busy at work, so I didn't. Mind you, it's the same order, same trade. I'm just letting it run. Gave it enough breathing room. It came below where I entered, but it went right back. Worked. Yeah, let's speak a little bit quicker. Knowing me, I probably would have got out on that wick, but we're just gonna let it run and let's see how it does. Boom, right there. You see that? So even myself, when I saw that wick, I didn't let the trade go. So I would have took profit probably and got out here because that wick would have bothered me. But on the flip side, it goes back to trusting the trade, the plan. What was the plan? Enter here, stopped here at that swing low for me. I want a 2-to-1 ratio, risking 1 to make 2, and just let it ride. You see how easily it hit it? Anyone got any
If it's
questions on that?
Yeah, what is the psychology behind the opening range? I understand like the levels, like a lot of that has to do with institutional, right? Because most of the volume happens right at open. So
Correct.
what are these like? What do these levels kind of mean? Like it's sort of, you can see like the top of that yellow line that you broke out. That's
Mm-hmm.
kind of where sellers ran out of steam, right? So you're saying like if you're kind of generally safe if you're in a trend up above that line,
Yeah,
but you don't want to jump in too soon, right? Because like obviously like the opening range is also very volatile, right?
yeah, it is. And you can see it right here. You'll get whipped. That's why, what do? We wait for break, retest, and then shoot out.
I'll always wait for that retest then, right? Unless it's just taking off.
If it's just taking off, and then you're going to switch your strategy. But the idea for what today was start with basic. That is a trading plan. That's what I was trying to tell Daoud in the chat. Pick one thing. Listing 20 setups is not going to help you.
Mm-hmm.
So, like you asked the question, because you're understanding the setup here, correct?
Mm-hmm.
You understand what is the basis of the trade. These are my rules. I mark off first 5 minute candle, right? After that, second rule, I'm waiting for a break and retest. Then I enter. Go long. If it went the other way, I'd be going short. I'm looking for a minimum 1-to-2 ratio,
Mm-hmm.
1-to-3, depending on the day. If I think it's going to be pretty volatile, there's nothing wrong with it. I might drag this up or I'll put multiple orders in. I'll scale out. That's why you'll hear me sometimes, certain guys, sometimes says, hey, I'm up so much in this option contract. What should I do, buy or sell? And the first thing I look at actually is not what they're in. I look at how many contracts they have. Because if you have one, what are you going to do?
Yeah, you can't scale back.
Exactly. So when I do this type of trade, I do it primarily on futures, but I've done it on options too. I'll put in two or three at least. So then what happens is I'll put one order to hit the two, and then I'm going to put another one, exact same spot. Will it let me do another one? It should. There we go. I'll put another one, same stop. Only in this one, I'm going to take it up to three.
You
Now,
never
mind
really
you,
use ATR, right? You just mainly you're mainly assessing risk on based off your position sizing and how much you're willing to your stop loss, right? Also,
correct.
obviously, like and supplies and the supply
Yeah,
range, right?
right. I'm going to add all that in there. I'm just trying to get you guys to comprehend. Pick one thing. Don't try to chase 20 different people's setups in the chat. You're going to get lost because
Hmm.
everyone trades differently and trades on different time frames. Okay. Some guys swing throughout the entire day. Some guys are just quick in and out. Like for example, um, Sean does scalp sometimes, but he's more of a swing trader. But he will take day trades. Okay. Um, Dave Fresh, as everybody knows, he's a quick scalp in and out. I like to trade the same way, but I also take swings. But most of my swings will be either long dated options or you'll see in the small accounts, I'll swing shares. So for me, this doesn't matter. This is when I'm particularly scalping. This is what I'm using when I trade MNQ or MES. Okay. So on this one here, let's see. If I had two orders in here, one at 2 hour, one at 3 hour. Let's see how that one turns out. Will I hit or I get stopped? And normally if I hit that, knowing me, I'll most likely bring that stop up. And there she goes. You see how it is when you can scale out and you have more than one contract. That's why people will come in and like, oh, I have $100, I have $500. Can you make money on it? Yeah, but you're theoretically just gambling because you can't position size properly, and you're not going to be able to scale in and out of positions. And that small of account to start with, you're looking at zero DTEs. And you guys already know from the chat what I think about those. You only use them on explosive moves, if at all. My rule of thumb is the first hour or two when I used to trade them, that was it. 10:30, 11 o'clock, I'm done with zero DTEs. Don't touch them. Because the most of volatility is in the morning, right? Once that volatility is gone, those things are just going to burn. And that's all they do. So if I was going to take a trade in the afternoon, I would normally use at least 1 or 2 days out. And even then, I'm looking to close that trade probably for the days up. Okay, but enough of that for the options. So there's the basic foundation of this trade. Okay. So now let's layer onto things like some of you guys have mentioned. Common way a lot of people do is here. This is extended hours. Turned on. Normally, I don't care what happens after hours, so that's irrelevant to me. Let's take that off. It's pre-market high, right?
Face, one question.
I'm sorry?
I have a question. In the simple setup you had just now, when would you have plotted your levels prior to doing this? Because when would you get out? What part of your plan says when to get out?
I just showed you in the other trade. I did that without marking any levels. I did that
Without
purely on risk to reward.
Right. And you said you would have come out with spikes with
Yeah, just looking at the price action, that massive candle that got pushed down with that wick,
right,
I
right.
probably would have bailed without it. Just looking purely at that. Now, what I'm showing you is how you take something basic and now you add on to it.
Okay,
Okay.
cool. Yeah.
So the next step after the basic part would be pre-market. So let's put in, normally I would just mark the line, but just so everyone can see it, it's a lot easier. Let's do that. And we're going to add another one here. We're going to call that pre-market. Oh, let's make it just so it's okay. Everyone with me so far on what I did? This here is a pre-market. I took the higher pre-market and I marked off the low. Interesting. You see how it hit there at a resistance? Can you guys see that? And then it kept going right after that. So now if you have a trading plan, your next step could be, hey, first 5 minute candle, mark it off. Step one. What is your process? Well, before you get the process, your next on your charting, and like someone said earlier, before it even just before open, you could probably mark this off. There's my high, there's my low, right? So that's the next step. And you can see how it comes in handy. It went down, but didn't quite get there right at open. Started pushing. We got in here, right? Here's a break, retest. We got in. We rolled this out. Now, if you didn't want to do where I said the 1 to 3R or 2R, say you had a target in mind, which I sometimes do, and you'll see me say that, where I know price is going to go a certain place. I'm going to say, okay, I'm going to get out because I think it's going to tap pre-market high and then bail. That would have been a pretty good trade. It's almost a 1 to 3R trade. Now, if you had multiple contracts or multiple options, okay, you clear one at 1 to 2, 1 to 3, and generally, does not always. Everything in trading is generalities and probabilities. When it has this type of move and it's trending up like this, even though it's a slow grind, you don't have any explosive moves, volumes kind of blah blah for the day. If it takes off the high, most likely you're going to push higher. And you can see that here if I zoom in. You see that right here? Broke pre-market high, and you see the volume start picking up. So if you had multiple contracts, or whether it's options or I do in futures, you can start trailing this up. You might, move your stops all the way up to about here. Make sure I'm already in profit. So I closed out 2 to 1, 3 to 1. I can let this one run maybe up until there. Let it go spike. I see a dip right there. That's a change of character, isn't it? What do I mean by that? Very simply. What do you see here? This is really a push. I guess you could say that's high, low. What do I have here?
Higher
Low.
highs.
Yep. No indicators, nothing. This is just strictly watching the candles, watching the chart. What is it telling me? Broke pre-market high right here. Still an uptrend. No one's going to call this a short. You'd be a fool to short this. Then what happens?
It got to resistance and it came on down.
I guess you can do that if you wanted to, really. Now what do I have? Lower highs, lower lows. Is that pretty clear to everybody there?
Yes, sir.
And you see, this is no crazy indicators, no nothing. This is basic, just chart reading. I mean, this is probably in the first chapter or two in beginner videos that you guys probably all seen on YouTube, and I can even send them to you if you haven't. You know, higher highs, higher lows. What's a downtrend? Lower highs, lower lows. It's not hard to see. You don't need to have 50 crossover lines and what have you. They can help you to see and stay in a trend. Yes, I'm not going to deny that because I use them as well. But my main thing I'm looking at is this. And then what do I say in the chat a lot? I'm looking for confluence. What is it going along with? So let's take this off for here. Okay.
Face, before you go into the next, can you tell me again what did you mark? You marked the pre-day low or the pre-day high? I mean the
pre-market high,
pre-market low.
pre-market high, pre-market low.
Gotcha. And then break and retest and then follow the trend.
Follow the trend.
I
So
got
here's
you.
another
I'm sorry,
area.
real
Yeah.
quick. Where are you accessing that risk reward? I don't know if that's an indicator or whatever that
Yeah,
is.
it's just a tool. It's a long position and short position. I put it in my favorites. I forgot where it's originally at. I have it pinned. Yeah, it's in projection.
So when you have your trading view hooked up to your broker, is that
hmm
what you're using that as your stop loss? And when you get out,
Um, no, I primarily scalp on futures. So for that, it has its own little trading panel that comes up that it uses. So I'm not actually using that per se. So that tells me how many ticks, and per ticks, it tells me how much I'm risking based on where I put it. So what I'm doing is I'm putting in the actual order with a stop loss and the take profit in there. So it does basically the same thing.
all right, I got you.
So now this is how you layer things on. Someone mentioned earlier, and they're right. It's something that I look at when scalping. I'm looking at previous day. So let's mark off the next one. We're going to make that, I don't know, we'll make that one red. This is previous day. Okay. What was previous day low? Let's go previous day low. Now, can anyone tell me why those would be areas of interest for me?
For one, you know what price is probably wanting to go on the high side, and you know where it's wanting to go on the low side. And plus, you have a range in between, your low and your high. Because if you're already doing your 5 minute, which you have a range, and then you do your pre-market, that's another range, and now you got the previous day high and low that give you three ranges where price may move.
You are correct. The only thing I'll add on to that, the main reason you're want that area of interest, if I squeeze this up, you'll be able
There's
to.
a lot of buy
Okay.
and sell orders there, right?
So what happened when price got here? Let's blow this up, make
Sellers
it
stepped
easier.
in.
Sellers stepped in, right?
Yes.
So if people went short, I went short. I'm Bank of America. I have a gazillion dollars. I'm gonna drop this puppy. I just
Mm-hmm.
put in a massive order. I dropped it. I probably got out, but everyone else that saw it, what did they do? Oh, I red
Bought.
candle. It's going down. I'm gonna short it. Their stop losses are where? Right there.
Yeah.
Okay. That's what you call liquidity. Now on the flip side, what do you see here? Bunch of people probably went long here, right?
Mm-hmm.
Their stop losses are probably somewhere around there. I'm just making it up. That's the whole idea of these trading and technical analysis. I'm not 100% right. Nobody is. I'm just basing it off of what I see. I see this nice push off from here. That's telling me a bunch of sellers are here. So let's see. Are those areas going to come in handy the next day? Or maybe even later in the day? Go in here. Here's pre-market. Interesting. What did at open it do? And actually
That was a
pre-market.
support level.
Off it.
It it went
It
past
swept underneath.
previous day low. Yes.
You see that my white dotted line? That's about where I
Oh,
guessed where the stop losses would be, wouldn't it?
Yeah.
So what did it do here? It just wiped out everybody. Any orders that are still sitting there took out their stop losses. What do I call that? It grabbed liquidity, or AKA, you hear the term, liquidity sweep. That's all it
we
did.
could put a VWAP on that same area. It would probably touch that same stop loss.
My friend, we getting there. But I'm trying to show you that it can be, all this can be done if you just study the chart and understand, I guess, the psychology of what the chart is
Hmm.
telling you.
Yeah, with no indicators.
No indicators. I have nothing on here but volume, and I'm marking it up as I go. So I have a sweep here in pre-market. Then they ran it up. What do you think they're going to do during the day then? Sweep down, run up. What did they do? Exactly that. It shot straight down, took out previous day lows, swept underneath. And if you wanted to even count this, if you squeeze this in, you'll see it right here. Swept down. This swept down even lower. And look at the wick on that. Push, 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 push. Trying to shove it down. Buyer said nope. They said, okay, we're going to try it again. Came down. Could not come down that low. You see that?
Yeah.
Could not come down that low. So right there, when I see this, I probably had an inclination that it's probably not going to go lower. It could. I could be completely wrong. But at this point, when I'm seeing this, the likelihood is probably to go back up. But then I need confirmation. And my system for this trade setup is what? The 5 minute. That's my rules. I trade by rules. There's my break. There's my retest. There it's going off. I'm getting in here. Where's my stop? Under swing low. Okay. Not by percentages if you're doing contracts. Because you'll probably get, if you got in here and you probably said a short dated contract, you did 10%, you probably would have got wiped out right here. Right off that wick. 0 DT, guaranteed you would have got wiped out. Okay. So far, no indicators. Everyone with me so far?
Yeah.
So I'm going to start because I'm biased. I'm going to use my favorite. My good old anchor VWAP. There it is for the session. Now, what I'm doing here is trying to show you this is the trade setup, 5 minute opening range break. I'm using the VWAP for the day as a confluence. My trade setup is still opening range break for this 5 minute. Okay. But now I'm using the VWAP to assist me with that. So I see it dip down, come back up. Oh, VWAP's holding. For me, the slope. What's the VWAP slope? Heading up and to the right. So I'm more likely to go this way. So right now I'm biased to go long. There's a break, there's a retest for the 5 minute. And what did it do here? It swept just below VWAP. Boom, gone. And remember I said earlier, and I think someone caught it too, where I said I might have got out on that wick, right? Say I did get out on here, but now I'm using anchored VWAP, which is my second layer in this scenario. I see that tap from here and starting to push off, I'd probably jump in here. I'd probably go in. There's my break. There's a little retest. Doesn't quite come down, but close enough. That's pretty much what I'm doing right there, right under that wick. Same thing. Let's go for. Jeez. That's a 2 ratio? Is that right? Yeah. So that's a 1 to 2 snipe right there. Just that. I mean, why is the ratio that high? Because my stop's so tight. Because in this scenario, when I'm looking at this setup, if it starts breaking underneath that low, that's a swing low, and it's also under my anchor, my anchored VWAP or VWAP for the session. My trade idea, my trade plan, what is it? It's invalidated. I don't care anymore. Everyone follow me?
Yes.
Now, if you look at it, look at the ratio on that. Assumingly, I put this in and hit and said, you know what? It bounced off of VWAP. I'm going to target pre-market high. Guess what? That would have been a beautiful trade for the day. That's a ratio of 8. That means I'm risking $1 to make $8. Or now you scale up $100 to make $800. So that's why I tell people, gotta relax. Don't chase red candle, green candle, red candle, green candle, go, calls, puts. Don't do that. Logically think about what is going on, what is happening. It'll take time. You're not going to be as quick as, Mario or Curtis or Sean or Alpha or any of these guys because they've been doing it for years. I mean, I'm probably got a good amount of time on the chart now where I can see this where I don't need a lot of lines and stuff. I do it for myself because a lot of times I'm working. So I'll be working on this on a different my laptop and a different monitor and I'm peeking up at the chart. So that's another great trade. Now, do you understand how I'm layering things on now?
Yeah.
So I took the most basic thing, 5 minute ORB. That's it. And I said, okay, let me throw P market. Let me throw low. But the foundation of the trade is what still? The 5 minute ORB. Then you start, once you understand that, then you can start adding on things. Okay. Some of you guys don't like to use that. You like to use, I don't know, let's use exponential. Oh, that's not the one. I don't use them, but I know a bunch of you guys do, and that's fine. Doesn't matter what you use. The trick is consistency. What do you guys normally use? 9 or 12?
9,
The
12,
nine
20.
Okay.
9
There's your 9. Let's make it a different color. It's easier to see for you guys. That's a 9 EMA on a 1 minute. Now, you guys who trade EMAs, you probably would not mess with this. I wouldn't. Maybe here you guys would have jumped the gun. A couple of you, I'm pretty sure. Off that massive candle. You would have jumped. But the trick is, even if you're using EMA, what's the rule that we stated earlier?
You have to break
Break.
the retest.
There's your retest. Then go. And funny thing is, even if you use EMA, and I don't use EMAs, and guess what? It works. Here's my candle. Start above the 9. So most of you guys who use EMAs, you probably would have got in here, right?
Yes.
You would have carried this along. And depending, I don't use EMAs, so I would assume you guys would probably bail once it gets underneath. If you didn't get out here, I guarantee you guys would have got out here on this one.
Yeah, face. I know I would have. But when you use your your risk and reward,
Hmm.
that helps you see your target and where you're going to help you stay in that trade.
That is correct. That is the idea.
Yeah, yeah. Cause I got to learn how to use it. I really don't know how to use it. So I know for a fact I'd have got out that trade with that red candle.
So here's the EMAs, and I just showed you with EVOP. I don't even trade EMAs, and I can tell you, I think you guys use. What do you guys use? 9 and
9,
14,
12, 20.
9, 14.
usually you guys pair it. You guys use what
Curtis using
nine
9 and
and
20,
9 and 20.
50.
Let's see. Let's make this 20. You guys like to use the exponential, and I don't know. Well, these are red. Yeah. Okay. So you guys who use this, you guys use normally, I think, use a crossover method, correct?
So yeah, some people use that crossover.
Okay. So even here it works. Here's my 9 crossing over to 20, right? Staying. It tapped it. You're not out yet because it didn't break the 20. That's normally the rule I've seen people use. Right here, you would have got out, correct? If you're
That's
scalping,
correct.
maybe you guys would try and go for this. Nice candle comes down. You're still in it. Get a little tighten your stop losses here. You're still in it. You're still in it. Boom, you're probably out here. That's assuming you're scalping now. So my point of showing that is I don't even trade these methods. I can show you it works. Why? Because it doesn't matter what your EMAs are, your moving averages are. It's a matter of preference. Some like 9, some like 8, some like 12 EMA. Some use 12/24, some use the 9 and 20, some use 10 and 20. I mean, there's a million. Just Google it and you'll find on YouTube like a zillion different setups. What are they all trying to do? Figure out what the trend is. That's all it is. Now, how you do it is a matter of your preference, what you're comfortable with. Everybody with me so far?
Yes, sir.
So the question comes in, hey, Faze, you showed us that you can make money whichever way you want, right? You're building a trading plan. So if you're going to use this trading plan every morning, mark off this, mark off this. I would recommend doing pre-market high and low and previous day high and low. They become areas of interest. Okay. Doesn't mean they'd always go there. It just so happens to work out sometimes. Now, other than that, I just gave you a trade setup that works. You can use anchored VWAPs. Like me, I would anchor that one, take this trade all the way up. If I'm scalping the whole day, the way when I use anchor VWAPs, I'm going to take the high. I wouldn't do the low here because the low is pretty much was the open. And that's it for me. Then you guys probably see my crazy order blocks. And I do my little channels and what have you. And I do
Hey,
that, like I
Face.
said, because I work. So keep it up on the chart. Yes.
I know Shannon, he recommends doing like maybe 2 or 3 trades at a time. So would you like prioritize stocks? Obviously, volume is important, right? So would you, if the range of the pre-market is really small, would you probably not pay attention to that stock as much?
No, because if the range is tight in the morning, what is that telling you?
So not a lot of volume.
It's probably going to be a range tight day.
Oh, it's gonna be a range type day. Okay.
Uh
Yeah,
huh.
supply demand type market, right?
Yeah. Let's see if you can find a good one. Yeah, here's a good one. This was last Friday. Look how tight that range is. 584, 583, a dollar, pretty much. And I think I even said it on Friday, where I was like, yeah, I don't really trade. I just trade in the morning. I'll take a couple of
Hmm.
scalps if I can, and I don't. Volume's dead as a doornail. Where's your biggest volume? Right at open, right at close. By me seeing this, I already knew what was going to go on. It's Friday, number one. Usually lighter volume in the afternoons, particularly. Pre-market was dead as a doornail, so I already had a bias that it's not going to do anything worthwhile, and it's exactly what I did. Let's go to another day. Okay, here. Closed here, started dropping after hours. This is Thursday. Pre-market, what did it do? Boom,
Gap
shot
up.
straight up. It gapped up between close of the previous night and morning. Mind you, this is pre-market. This is not even market open yet. Comes up. Now, this is where another piece where you get a little bit better in advance to look at the chart and you see this. What happened here? If it gapped up, this is what you call a market inefficiency, right? I have a close here. Price opened here. So what happened to all the orders here?
People took profit.
Huh?
Everybody
People
sold.
took profit and sold.
These orders don't exist. That's the problem. Between that price closing, that price opening is what we like to call what? Your gaps, right? Market doesn't like it. Doesn't mean they always get filled though. If this had enough some catalyst, this thing could have just kept on going right in the morning. But volume wasn't that great. I don't think there was any big news that day that I can recall. Um, right after the morning when it started dipping, and there, that's for kicks. Do it again. We're gonna do your. Let's make that our pre-market again. 1, 2, 3, 4, 5. Here's your pre-market. Not your pre-market. I'm sorry. Your 5 minute each channel. 1, 2, 3, 4, 5. Opening
Hey,
range. Yes.
could you like what I do is it at first 5 minutes at 8:35, I just switch over to that 5 minute chart and I mark that first 5 minute candle that closed just to
Yeah.
like help people.
Yeah. It'll do the same thing.
Yeah,
Uh, Here. It's exactly what I just did it on the 1 minute, but there's your 5 minute. There's that 5 minute on the candle. Same thing. But you see what happened that day on that gap up day?
uh-huh.
Market inefficiency. What I tell you? Orders. Market's always got to be in balance. That's the ideal market. Supply and demand. Okay. All this got done. There's a bunch of orders that never got filled. So if there wasn't enough volume to keep it going up, what was it most likely going to do? Try and fill it, right? Doesn't do it every day, but there's a good probability it will, particularly if I see volume is not the greatest. Especially when that first 5 minute candle has that much volume coming in and that big on that 5 minute, I'm almost positive to go short. And what do you see again here? Everybody, what's our rule to get in a trade?
You're looking for a break and retest, right?
Break, retest. There she goes. Right? We're going to go short. Let's say here. Why doesn't that work? Try that again.
What's up with a retest? It's really people just jumping the gun, right? They see one red candle, like let me get a put. Most of the stop losses are right there, so the market just likes to retrace and get the stop losses out.
Um, Some of that, yes. What happens a lot of times is on a good move like this, if it's like this is a down move, so you got the buyers that are going to try and take it up, or there's more sell orders, right? Market uses liquidity like fuel for a car, okay, to move,
Hmm.
okay. I have 100 million orders to go short. Market doesn't have that available. I'm just making this up behind you, just so you guys get it. So what am I going to do? I need a bunch of people to get some orders in. So here's everybody buying up the orders, right? They're going long, correct? So they're going in this position. Let's just say it like this, right? I'm just making this part up so you can visually see it. Say they're going in right here. So if I start with the massive orders that I have, say I have sell orders coming in, I go in here. What are you going to do in this order when you start seeing me rip it back down?
So,
Sell, right? What is that going to do? That's going to add to the selling pressure. Same thing happens in reverse. And you can see right here, they tried. It actually almost came all the way back. Didn't quite wick out, but it came close. But they held. What did it do? Come all the way down. Look where that's, what line is that hidden? There's your close previous day. And a, yep, there's your closing price. Previous day. Bounced right off of that. She said, okay, keep going. Over here, you probably don't want to mess with it. Funny thing is, the 5 minute, it does come in handy later, as you can see in this example. Not always, but you can see whoever's sitting up here does not want the market to go up. You can see it right from the beginning. All these orders sitting up here, and you see this continuously happen. Are you going to go long? No. That's telling you somebody with a lot of orders and money is sitting right in there. We're going to turn that red. You're not going to win against them. Whoever that is, or multiple banks or hedge funds, whoever that is, they're sitting up here shorting this. You're not going to win against it. Correct?
yeah.
So even if I saw this, I'm not going to go long. My A plus trade or high probability trade is going to be here. I'm going to sit back, relax, drink my coffee, do some work, set an alert, maybe for here. When price gets in here, then I'm going to come in and take a look. Oh, let me see what price is doing. Okay, 5 minute. Oh, I see a good, nice push, right? Starting to go. Next candle starting red. I might go in here, right? Let's just say I went on that candle. Even this one, I'll take it lower. Let's take. And I'm going to do it right above that wick. Mind you, same thing. I'm looking for 1 to 2, 1 to 3. There's a 2. That would have hit. Boom. Profit. Let's see if I did another order. Say I did 2 orders. I want a 1 to 3. You're not going to get them exactly, but yeah. There. I see it bounce from here, so that's a good spot to get it. What did it do? Hit again. So off of there, you just had one trade there, right? Or I hit that earlier, correct? Second trade, probably went in 2, and the other one would have been 3. Guess what? I'm done for the day. I'm probably done right after here. Because this is really one trade. I just got multiple contracts in here. I'm done. I'm not sitting here staring at the screen all day watching every candle. Call puts, call puts. No. I wait for a setup. If it's not there, guess what? Don't trade. So be it. I live to fight another day. Everyone got that so far?
Yep.
Sure.
Sir.
Anybody got any questions before I go on the next little thing I wanted to show you guys?
Actually, I have a question. So, like you said on the earlier chart that even though you saw the green candle at around 11, you don't want to jump in there. Is it because of the larger sell volume that you see on the market open?
In this day or the other day?
Yes, I think this one. Yeah, yeah.
The reason is I wouldn't want to go in here because I can see the large selling pressure. My bias right here, and I also use Anchor VWAP. So knowing me, I probably have this already anchored. I'm going. It's already telling me it's going short. My VWAP is flat. What is that telling me? Neither buyers or sellers are winning at this point. It's flat. Doesn't have a slope up. Doesn't have a slope down. Guess what price is doing?
Copy.
Guess what volume's doing?
Copy.
Okay.
Flat, low. Now all of a sudden here I see that big candle, increased volume, bigger than the ones before it over here.
Mm.
Now I'm interested.
Okay. Thank you.
Mm-hmm.
Question face.
Yeah.
So for the pre-market setup, I mean, for you to mark the pre-market high and low, around what time do you normally set that before market opens? Like 30 minutes before? Do you set it up what up
Sometimes I'll do
till
it 5 minutes before. Depends
okay?
on what I'm doing. I mean, I sometimes have to go into the office. I travel for work occasionally.
Mm-hmm.
But normally when I'm working from home, I'll come down, grab my coffee just before market opens. Usually you can get an idea like this. Like for this day, I probably would already had pre-market low marked. Just before open, I can see it
Mm-hmm.
here. And it's all of what? 2 seconds. Grab that. Boom. That's it.
Okay, and then the previous day high and previous day low as well.
Yeah.
Okay,
A lot of
perfect.
times I do that at night around this time or later when you
Mm-hmm.
see me in the chat and I'm sitting there chatting with you guys. This is what I'm usually doing.
Got it.
What I will do is mark these off or I'll zoom out to a daily time frame.
Mhm.
Uh, there we go. Oops. And I'll get an idea of what is going on, what generally is happening. And I can get it a whole different thing of how I look at it, but I'm not going to do that right now because that was not the point of today's little meeting, class, discussion,
Right.
whatever you want to call it. Um, but yeah, so this way I'll just get an idea. I mean, same thing. Low or the high, low, boom, boom. That's all I'm looking. I'm just looking at what the trend is doing. Now, what is price action doing? Green candle, doji inside, doji inside. Oh, we took out the low. Now we're coming down. We sweep. Still didn't come up the high yet. So what do you think tomorrow's probably going to be?
Hello.
Huh?
You say it didn't take out the high,
Nope.
so it's probably gonna be a low.
You could be right. But the trick is going to see what pre-market does.
Okay.
So let's take all these off and just strictly just look at it. Right? So since we're on this, where's the typical? Here.
Tomorrow is gonna go back and potentially try to test the high.
It does.
If pre-market, if pre-market, I mean, if pre-market doesn't take out the high of the day, is that what you're kind of looking for?
No, from the daily, this is what I'm looking for right here.
Okay.
Higher high, higher low, right? All the way up here. I have a
Mm-hmm.
higher high. Right now, if this was to pivot here, I have a higher low. But I don't know that yet because tomorrow's candle could come down.
Mm-hmm.
That is correct.
You follow what I'm saying?
Yes.
Maybe we get up tomorrow and it likes, I don't know, because whoever reported tonight shoots up or starts heading and clears this. Now I'm leaning a little bullish. Maybe it does this. Now at that point, what did it do? Break a structure,
Yeah. Mm-hmm.
right? If it did this, what is that now?
In reversal.
Reversal? Or you like to call it the fancy names, change the character.
Yeah.
Same thing. All these fancy names and indicators, it's all basic. Don't make it more complicated than it is. This is the entire thing that's all set up off of. Market structure shift, change of character, break a structure. This is all it is. I mean, you want the indicator, that's easy. It's available free. But that's fine. Put it on there. I have it on my chart. I don't use every detail of it on my chart, but like I said, because a lot of times I'm working, I can peek back to see what's going on. So I don't have to spend that much time staring at the chart. But the idea is you should be able to do this, or at least start to learn to do it without anything. Trust me, you'll become a better trader. You won't need anything but this.
Face on the 5 minute, you did the markup manually, the high and the low. What did the indicator do? ORB indicator. What, what did it contribute to your markup?
What is the what? I'm sorry?
Markup in the 5 minute, the first 5 minute candle. You did the high and the low,
Yeah.
but you still use the ORB. What did the ORB contribute after you did it manually? I couldn't see what it did.
It told me when to get in and when to get out. Really when to get in, not really when to get out. Which direction to get the trade. So here's a 5 minute on the day. High and low, first 5 minute candle. I'm looking for a break and retest. There's my break. There's my retest. I'm pushing out. Now I'm in the trade. I'm looking to go long now. That was the whole point of happening that opening range. 5 minute opening range candle break. Yeah, mine simple and effective. Simple doesn't mean it doesn't work.
You don't need to use the opening range breakout indicator.
I'm sorry?
You don't need to use opening range breakout indicator. You can just do it
I
manually.
cannot hear you, so I don't know if it's your mic or you're on a phone and bring it closer.
No. Are you hearing me now?
Yeah, a little bit better, yes.
Oh, okay. So you did it manually, and I'm saying you don't really need to use the indicator itself. You can just do it manually, right?
Yeah, I didn't use any indicator.
Right. Oh, great. Yeah.
That was the whole point. Now you can have the indicator if it helps you out to follow and see the trend. I mean, because I understand I've been staring at thousands of these charts by now, different
Yeah.
tickers. So I've kind of trained myself and it took a while. I mean, what? Day trading a little bit over a year now?
Right. But I understood this setup very good because I use TradingView for Forex. So
Hmm.
this this made me see how to plan. I mean, really quickly. As soon as you started doing it and you use long and short, I saw how I can do a plan. Before I was very confused. So thanks for that.
No problem. It's all the same. Once you get a specific trading plan or setup, you can trade on this with stocks, ETFs, Forex, crypto, doesn't matter. Futures, all the same. Because what are you trading? To me, it doesn't matter what I'm trading as much, it's the setup. That's why I keep pounding people in the chat. Tell me what the plan is. I don't care if you think SPY is bearish tomorrow, it's bullish tomorrow, QQQ is going to run to 800. Irrelevant to me. What's the plan? What's making
Yep.
you think to go long? What is it making you think it's going to go short? And oh, it ran up today. Well, that's not a plan. That's not an answer. This is a plan.
Yeah.
This is one of many, but this is the simplest one I could think of to show you guys without crazy indicators and lines and drawings and everything, whether it's in my chart or anyone else's chart. Don't make it complicated.
Yeah.
You can use anchored VWAP, EMAs, whatever you want to help you. It becomes a confluence to assist you. It should not be, well, it touched here, I'm going short. It dropped under VWAP. No, I got to look at what else is it doing. No, it's in the top range. That's a possible retest. I'm not going to go short just because they got below VWAP. You follow what I'm saying? Or I see
Yeah.
this massive red candle. Oh, better go short. No, why? My VWAP is sloping up. I've been trending up all day. Why would I try and short this right now? There is a way to do it, yes, but it gets a little bit more advanced and a little bit more riskier. I'm trying to make it as simple as possible for newer traders that you don't have to use all these complex ideas and indicators and what have you. Just read candles, read the chart. The
This
chart
was
is your book, candles are your letters.
On top of this technique, do you use pattern formation at all? Like maybe on a higher time frame to like use it for as confirmation bias? Say like a
Um, I do.
double top or etc.
Yeah.
A head and shoulders.
Yeah, I mean, I can show you here. I took this snipe. I think me and D Fresh were chatting about it where he thought I got blown out of the trade because it dropped. Well, no. I knew that was a possibility.
Inverse head and shoulders right there, right?
You have both, actually. A lot of times you'll get inverse head and shoulders within a cup. Here's my liquidities right here.
Mm.
There's my neckline. Okay. On the flip side, you can also see, what do you see here?
Couple.
Handle,
Ambo.
a breakout. What does it do next? It closes a bigger cup. What do I see again? I actually took that trade right here off that wick. I was in, literally, stops were here. And I had a feeling that I was going to try and complete another cup. And I saw this area because I always look left to see what's going on. I was like, most likely it's going to try and hit at least around here before it started pushing down. And how do I know that as well? Let's use this. If that is my neckline, and that is more or less the bottom of the cup. Theoretically, it doesn't always work. Nothing is absolute in trading. That's the whole move I'm looking for. The depth of the cup a lot of times will tell me how far to target. Problem is, I didn't shoot that high. And the reason is because the original cup was neckline was down here. Really? You see that? So I figured that much. And you see where I targeted and I said I got out on that wick? Boom, right there. So this is how you plan out a trade. I saw this happen, cup handle, larger cup and handle. Those are my confirmations. I see the handle retracing back. I start seeing this. I'm watching the volume. And what happens on the cups? You notice this? Downward move, you got high volume, dips, dips, dips. Boom. Nice push off. Volume's dead, 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 dead. What does it do? It starts spiking when it breaks. There's your neckline break right here. Nice volume. There's my next break coming in. You see the volume start to come up.
So
This
what
is
all
how
that
you,
means, Paige? Like what that's I mean, what that mean? What you just said about the volume with the brakes and everything? What are you looking for?
this is a cup and handle formation. Here's your
Right.
handle. Here's your cup.
Uh-huh.
On the break, I'm looking for increasing volume.
Okay.
Because if it comes in really light volume, it's probably
Yeah,
not going to continue.
I got you.
So right here, you see, it made the move that I wanted.
Uh-huh.
And I said I was targeting that area. So I think I got knocked out right about here. So I was good. And if you look for a risk reward, that's a 13.
Okay.
So in other words, the ratio of 13.5. That means I risked $1 to make 13. Now scale that up. That means I took $100 and just flipped it to 1,300. So that's why I say I don't look at it by dollars. I look at it by risk. How much am I risking to make whatever it is? 2R, 3R, 4R, 5R. I've just got a little bit advanced technique just from doing this long enough now. Well, I don't always just go for the 2R, 3R. I may try and chance it looking at structure because I like to do it off of the structure that I see. Does that make sense?
Yes.
All righty. So, before we wrap things up, we're going to 9:47. Yeesh, that long. Okay. I'm going to show you one thing. Where'd it go?
And you do all your trading off the 1 minute chart?
When I scalp, yes.
Okay.
I'll flip. If I do overnight sessions, I'll maybe do 5 minute just because the volume's a lot lighter. I don't get as much movement. Here, I want to leave you guys with this. Can you guys all see that?
Yes.
Yes.
Yeah.
This is simply how when you just manage your risk. There's a $500 account size, right? 2% risk. Now, when I say 2% risk, what am I talking about? I'm talking about when I do this, when I put an order in.
Yes.
That right here, see that red area where I get stopped? I'm risking $10, for example. The R's I'm looking for is this, the ratio. I'm looking for a 2R trade. I'm looking for a 3R trade. So I'm risking 10 to make 30. Everyone with me so far?
Mm-hmm.
So I'm risking 10. So my risk, when I ask people, what are you risking? They're like, oh, it was a $160 contract. So you're telling me you're willing to blow the whole $160 contract? That's for what you're risking? No, I'm risking $10. I'm going to lose $10 if my idea is bad. I'm looking for an R trade to make twice as much, 2R. $30 is a 3R trade, and so on and so forth. If you have a solid system or trading plan, I want you guys to look at this. This is math. I'm not making any of this up. You guys can all go on Excel and do the same thing. I took 100 trades and I'm starting off. I'm really not that good. I win only 25% of them. Okay. I lose 75% of my trades. But mind you, I keep the stop loss. I only hit on 2 hour trades. I'm going to be down 250 after 100 trades. Mind you, after 100 trades, not like blowing an account in a day and I'm down 500 and I blew it, or I blew 2 grand today. After 100 trades, if I target 3 hour setups or I'm hitting 3 hours regularly, I'm still going to lose the same amount because I'm not that good. I'm only winning 25% of the time. Guess what? Only winning 25% of the time, I broke even. Imagine your kid coming home from school and said, I only got 25% of the math test. You guys would be upset, right? But if you keep your risk in check, guess what? You broke even. You've been doing it for a couple of weeks, maybe a month, maybe 2. Who knows? Whatever. You guys are quick learners. Maybe you did it in 2 weeks. You're only hitting half your trades and losing half. Look what happens when you keep your risk in check. Same thing, 100 trades. If I had 2 hours, I made 1,000. My total losses would be 5. I'm still up 500. If I target 3 hour setups, I'm up 1,500. I lost 500 because I'm losing 50-50. My winners, percentage wise, are the same as my losers, but I cut my losses quick. I'm still up for though on my account, right?
Mm-hmm.
Now you've gotten better. You've been doing this 6 months, 7 months, 8 months. You added on all the crazy indicators you want. You've got the Mario Kart chart. You got the wolf chart. You got the pigs fly chart. You got the new SMC ICT indicator and faces crazy laser lines all over the place. You're a 60% win right now. Now I'm up 200. Now my losses are smaller because I've gotten better, right? But mind you, I didn't change any of this here. All this is the same. Now I'm $800 in profit, 3 hour, 1,400. Now I'm getting really good. Now you're talking like Curtis, Mario level, these guys that are, professionals, they do this full time. They're probably between, maybe on their good days, 67. I can tell you, a lot of times they're not that high either. But my point is this: if you look here, as long as you keep your risk in check, you can be profitable without being that good. You can win half the trades only and you're profitable. I mean, it doesn't matter what account size you use. Let's take this to 2,000. 2% risk, now I'm at $40. So if I'm risking $40, I better make $80 is what I'm looking at. If I don't see a setup to give me that 80 or the 120, I'm not taking the trade. Now, see what happens when you increase the risk? Here, let's go back to 500 and I'm going to YOLO $100. Let's put 25%. What is it? 20%. Your account's blown right here. Especially if you're new, because you're probably not going to win that many. You are done real fast. When you get to 50-50, you might have a shot risking that much. But being beginners, getting past this area right here is very difficult. So my recommendation is cut the losses quick, position size. Don't put that much in your account. Here. Even that. I don't know. Let's make this 2,000. There. If you can start at least getting to 50-50 regularly, mind you, this is off 100 trades, then I can say, you know what, start taking it up slowly. Take it to 1.5, 2%. And mind you, this number will increase because you're winning more, right? So now instead of 2,000 a trade, you got 2,500. So your position size automatically and your able to risk went up. Everyone get that?
Yeah.
Yes.
Yeah.
Face, if you
Mhm.
could, I'm a little bit confused with trying to marry this with taking multiple contracts on a trade, because I know this is per trade, but you mentioned before to layer on contracts. So how can you kind of explain that part with risk management?
Oh, this is this should work. This is pretty much what Mario set up with, and I was toying with it, but it's the same process. Your portfolio size. We're gonna put it in here. Risk tolerance 1%. Let's make it higher. Okay, entry price. I don't know. I'm making it up. 40. I look on the chart after using delta to calculate. When that thing hits 30, I'm probably out. So I'm risking 10. So that's telling me this is for shares, but it's the same thing for options contracts. Only thing is you're going to use a delta to figure out, where you should be out. So right now, based on my risk tolerance, $5,000 account, say it's 1% risk. Let's make it higher. Let's make it 2. This is telling me whatever stock this is, I can buy 10. So this is in shares. You can do the same thing in contracts. So off of 10 shares, I'm risking $100. Why? Entry price, I want to be stopped out at 30. I'm risking $10. 2% of my account is 100. So that means I can get 10 shares. Right? So I'm risking 100. This is my total capital I'm using. My risk is 100. Mind you, my risk is not 400. In other words, 10 shares at $40. That's the capital being used. This is my risk right there. That, that, and that is based off of that. So you have 10 shares. You see it. I did this on a previous trade on PSNL in the small account challenge. So at 1R, that's $50. So at the $50 price, all this is doing is going from entry price to 10, because that's 1R. You can sell some here. 2R, I probably sell majority of it. Be out, got all my money back that I put in. 3R, oh, that's my runners. That's pure profit. I have all my original capital in here, plus some gains. So for 10 contracts, you could do, everyone does, I've seen guys do it differently. You could do something like this. So that's 10 shares or 10 contracts in this situation. So right here, I'm selling 4 at 1R. Then the next 4, I'm going to sell at 2R. The last 2, I'm closing it out completely. That's $580 by using $400 worth of capital. But how much did I risk to make the 580?
70.
Huh?
100.
100.
100. That's what I used. So I was able to turn this into this.
Okay, so I guess I just have to find contracts that are, it's not necessarily with options, the quantity of contracts, but the cost of the contracts too, and do that calculation first. So that it
Yeah.
keep me within that $100, if that's my risk tolerance, keep me in that price range, right?
Correct. So
Okay.
if you have something you bought for $100, which is $1 in options. So let's use, and your delta is 50, right? That's cost. That's delta. Your delta tells you for every dollar in the price movement, that's how much that's going to move, right? So if it goes up, it's 150. If it goes down, she's dropping to 50 cents. That's off a dollar move. So I'm assuming, say, you have $1 stop loss. You follow what I'm saying?
Yes.
So
Okay.
then you should be down here. But then now, if you're saying, hey, I'm going to get stopped when this original cost was $1, it gets down to 50, I'm done. But if you notice, how much of percentage is that? 50%, isn't it?
Yes.
That's why I love it when guys say, oh, I'm using trading options. I'm just going to do a 10% stop loss. Well, guess what? You're going to get stopped out like crazy. I can tell you that. Because the market doesn't care. Do you see anything on percentages on this chart? If you're going long here, where do you put a stop loss? 10%? No, you put it under the swing low. If you're going short, what do? You put it above the swing high. That could be more than 5 or 10% of the contract when it moves. Percentages don't mean nothing. It's the structure. What the price action is doing is going to dictate it.
And how do I get my hands on that spreadsheet?
I took one that Mari put in the small accounts challenge, and I added a bunch of other junk to it. You can see me toying with stuff and my other things. So, um, give me a little bit. I can make a cleaned up one maybe, and I'll put it out there for you guys.
It'd be great, thanks. We'll be able to do shares and options on it?
It's primarily for shares. Maybe I
Okay.
can tweak one and make one for options as well.
Yeah, appreciate that. Thank you, Face.
Okay.
Thank you.
All right. Anyone else have any questions? No?
No, but thank you. Thank you for this lesson tonight and for your
All
time.
right, guys.
No,
Well,
Yeah, I
thank
appreciate
you.
it, brother.
you guys all have a good
Appreciate
night.
it.
Take
Thank
care.
you.
Appreciate
Too
it.
bad. Thank you very
I
much.
got it tomorrow.
All
Thank
right.
you.
Thank
Thank
you
you.
so much.
No
Thank you,
problem.
Face.
Thank you, Face.
You're
Thank you,
welcome.
sir.
Thank you.
Face. Hello.
Yeah.
Quick question. Um, when you use the well, I was just caught up on one thing. You said you make you use 100 to make 1,300. Is that for options or that for futures?
Say it again. I'm sorry.
When you mention on one of the when you mention when you use the 5 minutes
Uh-huh.
and the breakout, you said you potentially could use 100 to make 1,300. Is that for options or for futures?
It doesn't matter what it is because it goes back to your risk to reward, 1R, 2R, 3R.
Okay,
So if I'm risking
understood.
100 and I say I hit a home run and I got a 13R trade, I just turned 100 into 1,300 was my point.
Okay, all right,
If I hit a 3R trade, I just turned 100 to 300.
got you.
So that's why I don't look at dollar amounts particularly. I look at
Okay,
everything as risk to reward. What am I risking? What am I potentially going to get out of the trade?
and I'm new to the option trading. Would you buy the option closer to in the money or a little bit out?
It depends on what the trading plan is.
Mm,
The shorter dated options, you will burn theta on you if the market goes flat. You better learn to cut them quick.
understand.
Anybody's brand new with trading, I highly tell you do not trade short dated options. You will get destroyed.
Understand. All right, man. Thank you very much. I learned a lot
No problem.
already.
All right, take care, guys. Have a good night.
Okay. Hello.
Good
Yeah.
night.
I have a question. Do you schedule one-on-ones?
I do not. Um, I'm pretty busy in between a lot of things I'm involved with.
Mhm.
So I haven't committed to doing one-on-ones just yet.
Okay. Well, when you do, could you just put it out there so we'll know?
I'm sorry.
I said, when you do, could you put it out there so we'll know? Because I kind of wanted to. You just made this so simple, and I just wanted to kind of get my chart set up properly, and things like that.
Okay.
But also, will you have this recording listed?
Yeah, it's being recorded actually. So what I'll do
Okay.
is I gotta render it. I have to like compress it so it fits on and can you upload onto Discord and all that stuff. So that takes a little while. So it should be up hopefully by morning.
Okay. Okay. Because I want to watch this again. This is very, very good.
All
Thank you
right,
so
no
much for
problem.
your time.
No problem. Appreciate it.
Alrighty. Have a good evening.
All right, take care, everybody. Have a good night.
You too. Bye bye.